Hi, this is Kevin Davey of KJ Trading Systems, and welcome to a 5-part video series of how to trade like a champion. Just to give you some background on myself, I've been a futures trader for about 19 years now, and for 3 years in a row, from 2005 to 2007, I came in either first or second in a real-time, real money, year-long trading contest. Each of those years I had over 100% return. So that's where the title of this video series comes from, because these are the same steps that I used to become a successful trader, and I'll show you how you can use them. Well, first, a disclaimer: you should pause and take some time to read this, because there are significant risks in trading futures, and whenever you see hypothetical results, you have to realize that they may not work in the future. And finally, all account decisions should be your own. So what are the 5 steps to trade like a champion? We'll go through each of these in this video series, but basically you have to have a written plan, you have to find a strategy, you have to check and double check what you're doing, you have to execute the strategy, and then you have to monitor and adjust. And all of these are important whether you're creating your own system or you're following an advisor. Welcome back, and now we're on our 3rd step in how to trade like a champion. And the 3rd step is to check and double check. This might seem to be a kind of mundane point, but if you remember, whenever you were in school, the teacher would always tell you, remember to check your work. Just don't do something and turn it in. Check it, because you make a lot of mistakes. And that holds true definitely for trading. I can't tell you how many times I've personally created trading systems that looked great, and when I went back and tried to verify them, well, it turned out I had programmed something wrong, and I was using possibly tomorrow's prices today, which is impossible, but would make for a very good trading system if you could figure out a way to do it right. So verifying everything that you do and everything you look at is critical to developing a good trading system. Now, how I did it, as I mentioned, I look for programming errors, and usually in a system I'll create, I spend quite a bit of time just verifying results, hand checking trades, looking for things that just seem out of the ordinary. After a while, you get a feel for things. If they're too good to be true, they probably are. So you need to spend a lot of time looking for errors, and the same thing holds true if you're buying a system. Look for errors in some of the material the sales material, because you might find some critical mistakes. The other thing I did was I would create a mirror system. So instead of buying at a certain point and selling at a certain point, I would do the exact opposite. And the benefit here is that you get to see if the logic makes sense in reverse, or if it does the exact opposite. And that gives you a feel for the trading signals being programmed correctly. Now, how can you do it? Don't rely just on the literature that you're given, the sales material. Look for independent verification whenever you can. There are websites out there, and I list a few here, where trading results are audited and compiled by a third party, where it's not the developer that's showing the results. If the person you're looking at is a commodity trading advisor, a CTA, you can look at the NFA website, National Futures Association, and check for this particular advisor and see if they're have had complaints in the past. So, and basically what you want to do is you want to look for real-time actual history. You hear a lot about hypothetical results, and past performance does not guarantee future results. Hypothetical results are interesting because it's very easy to create good-looking, great-looking hypothetical results that will never work going forward. So you want to look for real-time results whenever you can. Some of the warning signs that you should look at, and if you see them, check and double check that they're true. any system that has greater than a 90% winning percentage is a warning flag. And the reason is because they tend to bury their losers, and you'll never see those. If a system claims no drawdowns, it's almost impossible. So watch out for that. If they don't include commissions and slippage in test results, that's another warning sign. So that's something else to check and double check. And the bottom line is, if you see an equity curve for any system that you create or that you're looking at purchasing, if it looks too good to be true, if it crosses your mind, boy, why is this person selling this? This is just great. Chances are it probably is too good to be true, and it's probably not true. So that concludes the third step in our How to Trade Like a Champion series. Again, visit my website, kjtradingsystems.com, for trading tips, info, and articles. And I'll be talking to you soon. Thanks.